Welcome back to the Economics of Real Estate. I'm Dylan Silbernagel. That's my colleague, Matthew Gizzie. Every month we get together and talk about the current state of the housing market in the GTA. We break down the data, the sales volume, the trends, what's happening. But often we also talk about what's going on in terms of policy and the exterior factors that are influencing the market. Because if the real estate market lived in a vacuum, I promise it would look so different right now, Matt. And we brought some slides today that are going to talk about that. Because historically, supply and demand were such a big factor in our market. Now we've got some outside influences. But before we get into that, brother, how are you doing today?
I'm good, man. The weather's starting to move in the right direction. It was a really challenging last couple months with the winter. This winter's definitely seemed a little harsher than before.
Yeah.
I think we're seeing that in some of the data. You know, I'm not saying that winter's to blame for all of it, but I think it's keeping some people at bay because I know it's kept me inside my house a little more than usual as well. When you kind of look out every day and it's gloomy and it's snowing and it's minus 20. You don't really want to get out there. But the last couple of days have been really nice to get out, and hopefully it stays that way for a little bit.
Yeah, there's been a lot of talk of that. And I think the reality is, like, in Canada in general, the seasons do play such a large part of how we live our lives and where we're spending our time. And one of the reasons why, like, I talk to a lot of home buyers and they think like, oh, I bet you the summer, it's so busy, right? It's beautiful out. People are buying and selling. I'm like, well, not really, because we only get so many months of beautiful weather here in Canada. People vacation in the summertime, and we usually see sales volume drop off because people are trying to take advantage of that stuff. And so it's not really the time that we see people listing, where we see it more so in the spring and the fall seasons. And those trends have just continued to be true over the last 30, 40 years with some minor anomalies based on other stuff that's happening. So yeah, there's no doubt about that. You can't get around it, but let's be honest, that is not truly the big challenge that our market is facing, as we have been preaching for the last really 2 years that we've been doing this together. So, Matt, last week, you and I went to a fantastic seminar, meeting, where it was talking about the outlook for the 2026 real estate market, specifically for York region. They had some fantastic speakers there. And this next slide that I want to show after we talk about Ron Butler was something that really stood out to you and me. Like, we knew it anecdotally, and we knew it from just being in the market and our experiences helping families. But this graph really put it together, and Ron talks about it in a different way here. So I want to read this for you. This is Ron's response, taking a look at the January reports for new homes sold in January. And so it was 216 new homes, new construction units being sold. Was lower than 1981 numbers. And he goes on to say, like, look, right now prices are going down. But if you build absolutely no new construction of residential homes to buy, then eventually you're going to choke out some of that supply. So you're guaranteeing by building nothing right now that prices are going to have to go back up again, right? And I think that's one of the concerns. Like, we know and so where you see these gaps there's obviously, he goes on rants. If you're not watching Ron Butler, I highly encourage you to check him out on social media. A lot of fun to listen to. I think, Matt, you were one of the ones that insisted, like, I knew who he was, and you're just like, dude, you got to be following him. He's putting a great insight out there. And so anyways, he talks a lot about the other challenges where they're facing. Like, if we're not building, look at the amount of jobs that we're losing. People, the amount of cranes that you've talked about, how we used to have in the sky. Like, we were the number one spot in North America for that kind of building happening. So it's a real issue. But then when we get into the next slide, we're going to talk about that gap really that's missing. And so, Matt, like, when we take a look here, for example, now everybody watching this, we're looking at our blue line is our actual sales volume from the Toronto Real Estate Board. Our black line is our trend line. It's kind of our expected home sales, as they say here, based on employed GTA population. So this is where they're still expecting us to be. And like any trend line, you kind of bounce off it. You have your moments of your ups and downs. But really, since we maxed out in sales volume there in 2021, you can see the big change that we've had. And even though we thought we were starting to recover from 23 to 24, we kind of went the opposite direction last year, even though we were trending up. But this is the gap of expected transactions we would normally see in our housing market. And so, like I said, if we're living in a vacuum, this is going back up right away because there's just so much pent up demand. We've got bigger population now than we've had before. And it's just, it just goes to show to me, Matt, two things. One, we're dealing with a lot of outside influences. We're talking about the economy, uncertainty, trade stuff with the South, but also the reality of like when that certainty comes back and people are feeling more confident about what they're going to do, there's potential for this obviously not only to turn back around in terms of sales volume, which will then lead to prices going up, but when I look at how pent up it is, Matt, it makes me think it could turn around quicker than I would have expected. Like I still think we're in for a longer recovery, and he goes on to mention that in his quote. But I think the interesting thing is, will it start to look like one of these points where we accelerate quite rapidly from one year to the next once the recovery starts to happen?
Yeah, I think when you look back at after 2017's market and you see where the bottom was for 2018,
Mm-hmm.
and you look at the factors that resulted in that, and then you look at the factors that have where we're at today, this is a significant decrease in the amount of expected sales. And I think one of the biggest things in this market that's holding people back is confidence. We've come down 30, some areas 40% from the all-time highs. And if we start to see interest rates come down a little bit more, and we start to see the jobs market actually improve, come down from the 6.5 that it's at, if the job market's peaked from now and that starts to roll over, and people's wages are still increasing nicely year over year, when that confident, if we get an agreement with the United States and the war in Iran's over and things start to look up a lot more, this chart tells me that, just like you said, it's potentially spring loaded. I'm not going to say that prices are going to go up 40, 50% overnight, but all of a sudden you're going to notice when you go out to buy a home, there's a couple extra bodies at like going in and out. When you put an offer in, there might be another one or two people that are actually putting offers in as well. And that will be the start of it, right?
Yeah. And you know what else is interesting? Again, anecdotally, there's 3 agents that I've spoken to this week that just signed up new buyers. They're out looking, got excited, put in their first offer, and sure enough, they run into multiples. And like that is not the story of the market, but it is like there is a decent amount. We've referenced Sandra Jackson's post a few times. She's been tracking that, and there are still a pretty decent number of homes, like percentage wise, that are selling over asking, more so than you would imagine based on the sales volume and pricing of the market. So it's interesting to see that, and it just goes to show, like you said, I think the change, there's potential for the change to happen quickly when it does come. Now, when we met with an RBC analyst back in the fall, they were talking about, probably 2030 till we start to get back to these numbers, like the end of the decade is most likely. Now, this is sales volume, but pretend this is pricing because that's when we peak down as well, same year. As we extend to there, that's likely when we're going to start to see that. And again, that changes all the time based on, the state of the world. But this was important to look at. We don't need to spend any more time on it. Just look at how far off we are from the trend line of sales volume that we would anticipate, and know that there is the chance, once that certainty starts to come back, that this can turn around quite quickly.
And then going back to what you said too, like they're not building anything either on top of that. So the overall
Right.
supply, that's why, in 2016, 2017, when we peaked out, we were still building a lot of homes,
Mm-hmm.
right? And then even in 2018, when we bottomed there, we were still building a lot of homes. And now, like the people that I'm talking to that are on construction sites, they've got nothing to do.
Yeah.
And we need that to change, and we need to start building homes again real quick.
Yeah, I was talking with a friend in that new construction sector, and one is looking for new work at a different company, and the other one, they're like, we're building purpose-built rentals. We're okay right now. Like that's where their focus is.
Yep.
So it's interesting to see what's still being built.
Yep.
All right, let's jump into what's been happening in York region for the month of February. We've got now, Matt, we've got 2 months worth of data that we can reference and start taking a look at. And so as we talk about where we're currently sitting, we're looking at median price being $1,080,000. Month over month, we actually saw a little boost, didn't we? So we're up 2.9% from January, which is great to see. Year over year down, like that 2025 really had continued correction in terms of pricing and sales volume. So we're down 9% in that state. Currently creeping up on that 6 months worth of inventory. So On the other side of balanced, leaning into more of a buyer's market as a whole for York Region. Month over month, that those months of inventory were down just a little bit, down 9.6%, but up in terms of those months of inventory from where we were a year ago. Sales to new listings, 31%. Again, taking a look at this, we're creeping up just a little bit on that month over month, and pretty bang on for where we were same time last year. So that's good to see. Active listings were up a little bit, 3,990. That's up 7% year over year. Month over month. Not far off of the pacing from last February, though. So I'm liking to start to see that as, like, to me, that feels like the recovery. This increase of 7% is kind of on par with that. Now, I'm not advocating for more and more listings. We don't necessarily want to see that, but I like seeing that we're kind of in line with where we were there last year instead of too much higher, because, Matt, a lot of our graphs, we're showing already that we're higher than where we were last year in terms of active listings and months of inventory. So something we got to watch for. Average days on market, so 630 units sold, up in terms of our month over month, up 10% from January. Got rid of some of that cold spell, Matt. Our transaction volume, though, down almost 20% in comparison to last year. Days on market, we're looking at about an average of 40 days to sell. That has crept down from 46 last month, but in comparison, last year we were sitting at 27. So quite a substantial jump in terms of the time sellers should be anticipating it takes for their home to sell. And the other big difference here, Matt, we've talked about this a lot last month. Sales to new list price, we've dropped down to 97% of the asking price. In comparison to this time frame last year was at 101. So again, you talk about like when's the spring market hit and when's the time to be selling my house. If you can get out there in January and February before the big rush of all the added inventory, you're usually in a good spot, and you can price your homes accordingly for that marketing strategy where you get over the asking price. I'm not saying this is over market value, but over the asking price that you're listing, which usually meant you had a shorter marketing time frame. Matt, anything in particular stand out here for you as we take a look at what was happening in York Region?
Yeah, I think it's still clearly a strong buyer's market in York Region. Your months of inventory is just below 6. Anything over 6 is a buyer's market. You've got your sales to new listing ratio at 31%. Anything under 40% is still a buyer's market. So these metrics are still screaming that it's the buyers have the leverage in this market right now. And I truly think that, from the last charts that we looked at with the pent up demand, if you're capable of buying, and you can see the sales to new listing price at 97%, it means that sellers are willing to come off their price typically a lot more than they usually would. Last year was 101, so they were getting a little bit more than what they were asking. Now they're taking 3% in a lot, and this is the median. The median. So there's a lot of people taking 95, 94. These are good times to try and negotiate for a great deal on a property, I think, for if you're in the buyer's category.
Yeah. Yeah, absolutely. And one of the reasons why we talk about this for home buyers and sellers is like not everybody is as dialed in or as aware or is getting walked through all of this. I heard at a random party I was at over the holidays, somebody was talking about how they just purchased a home and they're like, and we didn't have to go into multiple offers for it. How amazing is that? And I'm, like they were out in, outskirts of town too. It wasn't like they were in the GTA core having this this feedback, but their mindset was still in the COVID years where everything was selling over asking. And just when I heard that, I'm like, oh, like your mindset's a little bit different than I think the reality of the market, where you're surprised that you didn't have to go into multiples to get a home, where that has not been the case really for the last little
And that will change because Canada needs immigration to continually grow. We're clearly not having enough babies to resupply the population. So immigration is always going to be a factor. We've got barely anything getting built. We've got huge pent up demand. Clearly, this might be the year for people to, if you're a buyer, to really consider it, because in the following years, you're looking at, price increases anywhere from 3 to 7 to 10% on a year-and-year basis. And you're going to be thanking yourself if you got in. Everyone says get in when there's blood on the streets. Well, there's blood in the streets, all right.
Yeah. All right. Let's take a look here at our February yearly comparison. So comparing February's through the years, taking a look at median prices, we can see that softening coming down really since 2022. And it was February, March where we really started to see that shift anyways. But as we look through the years 2023, 2024, we've still seen that softening. And Matt, this is a part of the lack of confidence that people are seeing because there's that concern of like, hey, I don't want to buy it today and have it be worth less tomorrow. But in that challenge, like the people that were feeling that here, what ends up happening as you try to time the bottom, you end up purchasing over here a lot of the time, and you've already missed it on the way back up because it's just so hard to time the bottom. As we talked about, even with that pent up demand, the turnaround, when it does happen, it could happen very quickly. I'm not saying it's going to happen today, but once it starts to happen, it can go very quickly and you can miss that. So it's about making the right decision as soon as you're ready. But we're seeing
And
that
that's
trend going
why
down.
And that's why it's key that you watch us, because we give you
Yeah.
guys charts like this that are color coded that show you
Mhm.
when, um, the right cues show that,
Yeah.
hey, the market's starting to turn. It's already
Mhm.
starting. This is when potentially to get in. Is it right now with this data? No. but
Yeah.
but this is what we cover on a monthly basis to show you guys whereabouts in the market we are.
Yeah, exactly. And so the reason why we're seeing this softening here in median price is a couple of factors, right? Our transaction volume obviously way down. So what's happening is our active listings, because we're not removing inventory from the market, our active listings are sitting at all-time highs. And so when buyers have a lot of choice, gives them a lot of negotiating power, which puts downward pressure on the pricing. Now, what we are seeing in terms of new listing volume is normalizing. We're back at these kind of numbers in the spot. We'll see if it maintains, but we are normalizing there, right? And so if this new listing inventory continues to soften or at least doesn't stay high like it was, this should help with the active listing side, depending on when we start to see our transaction volume start to turn around. Because we don't have a lot of transaction volume and we have record highs for our active listings, of course, what do we see? Days on market is going up. It is taking longer to sell those homes because we're only removing, call it 25, 30% of the new listings that are coming on. And that's not including stuff that was already there from the month before. So our months of inventory have been creeping up through the years. And again, as February's go, all time high for our months of inventory.
Yeah, and a couple things I want to point out
Yeah,
here for
please.
what, like when I look at these charts, what I'm looking for. New listings, that's a great sign that we're not getting even massive amounts more. Like we've already seen a lot come in the 2021, 2022. We're starting to stabilize there. Um, when it comes to the active listings as well, we can see year over year, we're kind of stabilizing there. We're not continually every year getting worse and worse. We're
Mhm.
starting to peak out on the active listing side, which means then that's because the new listings are starting to normalize. So what
Yep.
we want to see is the transaction volume start to pick its way up as the months go on. We'll show every single month. Okay, what's March look like from last March, and so on. You're going to want to see the days on market start to maintain the level and work its way down, and then the months of inventory as well. But I think the new listings is the first sign for me that says, hey, we might not be seeing a massive amount of new listings hitting the market, which will help a little bit in the metrics.
Exactly. I love that you pointed that out, Matt, because once we start to see this turnaround, provided this stays normalizing, we're going to see this start to come back down. And then we start to see that balancing and choice. And right now, we're fully sitting in that buyer's advantage as we're talking about. We need this declining transaction volume to start to turn around, and then we'll
Yeah.
see that that change. Now, as we talk about what we're seeing in some of the different segments, particularly, let's take a look at our detached homes. We have seen a continued softening there, but thankfully, month over month, we saw a little push for York region going up 5.2%. Our median price for a detached home in York right now is 1,375,000. Months of inventory has come down a little bit, which is nice to see. So we're just under the 6 there. Sales to new listing is up a little bit, which is great. We like to see that kind of trending more that way as opposed to down. And so really, it is the dominant segment there in York. We do have more detached homes than the rest. So looking at 315 out of the 630 sales, and we have seen it improve month over month. Matt, talk to me a little bit about what we're seeing in the semi market right now.
Yeah, one thing to note too, the red border at the top of detached and the yellow border at the top of
Yeah.
semi-detached is kind of the year over year visual gauge for people. So as you can see, there's a lot of green on inside on the detached and on the
Mhm.
semi, which means month over month they're starting to look good. But when we're looking year over year, that red border at the top is telling us that year over year not so good. Semi-detached kind of balanced. But
Mhm.
month over month for both products are actually the numbers are looking
Yeah.
quite well. Other than the active listings on the detached that we're seeing, which were up 7.5%. But when we're just looking at semi detached, we can see that we're kind of balanced year over year. And then when we're looking month over month, price actually went up 5.8%. Months of inventory dipped down 18.9% to 3.82. So we're really seeing strength definitely coming from the semi-detached market
Mhm.
in York region. And then sales to new listings went up 9 points. It's at 42%. So we're actually in the balance market when you're looking at the sales to new listings ratio for the semi-detached. And then looking at sales up 7.1% month over month, active listings down 1.5%, which is a great sign. Days on market down 46%. And then this
Mhm.
is your sales price to list price was at 99. So we're
Love
seeing
seeing
that
that.
there are people listing with the semi detached are getting closer to what they're asking as compared to the detached, which saw just 97%.
So, Matt, this screams to me opportunity for semi detached owners that have been thinking
Yeah.
about making the move up to the detached because right now, this current month snapshot that we're looking at, our semis are outperforming what we're seeing in the detached market, which makes it
Yeah.
that great
And
time to take that jump up.
it does take it at the end of the day, detached is still softening year over year on the
Mhm.
larger scale. Semi detaches are improving. They're improving faster than detached. So if you're in a semi looking to go to a detached, it's definitely something to keep an eye on because I think that gap between the two is probably the lowest it's been in quite some time.
Yeah, love that. Okay, taking a look over at the townhomes again, looking at our year over year, still softening. Month over month, in our median price, not bad. We saw a 3.7% gain there. So townhomes in York, median price right now, 1,035,000. Months of inventory did start to creep up just a little bit, up 4.9% to 4.48 months worth of inventory. Sales to new listings did drop just a little bit. We're down to 32%. When we take a look at our sales, same thing. We saw sales volume drop that 7.5%. Active listings increasing up a little bit, about almost 10%. Days on market dropping just a little, and sale price to list price increasing to now 100% of the asking. So not bad there in terms of our townhomes. And then Matt, why don't you talk to us about what we're seeing in the condo market?
Yeah, so condo market, it's still a very deep buyer's market. We can see the band at the top suggests year over year is still not good. When it comes to the month over month on the inside, we can see that prices actually did increase 6.3% month over month. Months of inventory, though, this is where the problem is. You're over 7 months of inventory. It did come down 6.4% month over month, but you're still at a very high elevated number. And then sales to new listings ratio, it actually went up a little bit, five points. So from 24% to 29%, which is a nice jump, but you're still
Still
deeply
sub
in
30.
a yeah, you're still below 30, below 40 is buyers. So you're
Yeah.
really in that trouble spot when it comes to that. Now, what the condos don't have that the townhomes have, sales to listing price on the townhomes was 100%. They were getting what they were asking for after they adjusted their prices, relisted or whatever. Whereas the condo market is still only getting 97% of their list price. Active listings increased by 9.5%. So that's not a good sign. There's just more building up on the market. We did see an increase of sales, which was good at 12.3%, but
Mm-hmm.
it's not keeping pace to the amount of homes that are hitting the market because active listings is continually increasing. So still a very tight market in the buyer's market. If you're thinking about getting into a condo, it makes a lot of sense to be looking right now. If it doesn't meet your price, if you think it's still going to come down, okay, but you should be dialed in on what area, what location, what
Yeah.
building you want to get into, so that if the data or the confidence comes back to the market, you're willing to go in and scoop it up because like this is the cheapest segment of our market. And I think when things do turn, people will be going to this segment to get in.
Yeah, right now, if you're a buyer thinking about getting into the market and the condo's your starting point, never a better time in terms of the opportunity that you have. Like Matt was talking about, highest amount of inventory we've seen across all segments at 7 months. Well, like we said, deep into the buyer's market in terms of opportunity for buyers there. And Matt, I love that you brought that up. Like it truly is. It's the time to make sure that you've got your ducks in a row, that you're ready, you're educated on what it is that you want, very clear about that, but also that you're talking to your lender, you're talking to your mortgage broker, so you know what opportunities you've seen a couple places, because the right opportunity is out there. And if you are prepared, you will be the one that wins in terms of taking advantage of the opportunity at the right time. So very much so. That's our taking a look there at York. If you are curious about what else is happening specifically in an area for York region, please reach out to us, send us a DM, send us a text, comment on the video. We'll be happy to reach out, talk to you about what that looks like for you. All right, let's roll over to Aurora and talk about what we're seeing for the month of February in terms of what's happening there. So a little bit more red on the board in comparison to what we saw as York as a whole. When
Well,
we
let
take
me
a look
jump
at,
in there real quick just
yeah,
to paint the picture of why it's red, even though we saw price increases. This is kind of looking at it from a buyer's point of view. So
mm-hmm.
prices were up, so it was kind of a bit of a negative. So I just wanted to lead with the point of view that this is kind of like a buyer looking at this data.
Yeah, perfect. Thank you, Matt. Make sure that we're clear on that. So current median price is sitting at 1,200,000. Again, month over month, nice improvement for sellers there. We saw an increase of 11.2% on the monthly basis. Very interesting enough to see a 12.7 boost year over year, because we've been seeing some real struggles there in comparison to what was happening in 2025. So, and actually, you know what I will say, Matt, is because we're comparing February to February, we did have a decent start at the beginning of last year in comparison to how the rest of the year went. So I'd anticipate seeing these year over year numbers start to change as we take a look at that, unless we keep seeing big gains in our month over month activity. If we start to see that change. So anyways, we are looking at 5.21 months worth of inventory. And then coming over to our month over month change, we're down 25.3%. So we have shaved some inventory off of that. So that's pretty good to see. Then year over year, same thing, we're down quite a bit. So I think I know why we saw this change in our median price is because we saw a lot of inventory and choice start to leave the market there. And so we're seeing that change roll over. Now, when we talk about sales to new listings ratio, bang on at 30%. This is up just slightly from last month where we were sitting at 26%. So again, we're starting to see that improvement there, which is why these numbers are starting to look good. And we compare that to a year ago, same as what it was month over month. We moved from 26% to 30%. Active listings sitting in at 224, which is up 10.9% on a month over month basis, up just a little bit, 4.7%. So half that in comparison to last February. Transaction volume, we're sitting at 39 sales, which was a nice increase, was up 30%. And then when we take a look at what that was in comparison to the previous year, again, up 21.9%. So an additional 7 sales. This is very positive to see. So again, when we made this, we were talking about opportunities for buyers in the market, because really that's one of the biggest segments out there that should be taking advantage of this. But if we're talking about sellers, picture this, a lot of this red is green, because we're seeing big improvements here for you guys. When we talk about days on market, we're sitting currently at 35. This has come down a lot as well. In comparison to January, we were sitting at 52. When we look at the year prior, we're up just a little bit. Well, maybe more than a little bit. We were sitting at 26 days on market last year in comparison to the 35 that we're seeing this year. Current sale to list price, we're seeing buyers pay 98% of the asking price. This improved nicely as well from January, where we're at 95%. Matt, it's always fun to make jokes about the weather, because when I'm cold, I don't want to offer a lot of money on homes either. So we start to see the weather change a little bit, I'll pay that extra 3%. But again, in big comparison to last year we were seeing that buyers paying on average 101% of the asking price. So important to note when we talk about these numbers in particular, how we said, last year was actually quite strong. So it's interesting to see how that looks. And there it is right there, 101% of the asking price. Matt, talk to me a little bit about what else you want people to make sure they take away from what we're showing here on this overview.
Yeah, I think it's still a buyer's market, even though there's some red in here. There's some red in here because month over month, the price accelerated up. Months of inventory came down a little bit. Sales to new listings ratio went up, but at the same time, sales to new listings ratio is still very negative. Months of inventory is still elevated. It's in a balanced market. Active listings did increase. So a little bit, more choice out there. So still definitely a buyer's market, but I think when we jump into the next chart here, when we look at the February median price year over year, we can see some stabilization here compared to what we're seeing in the overall York region market. It looks like we've kind of formed a bottom because February 23rd, we hit $1,049,000. And then skip a year, go to February of 2025. We've hit 165. Now we're up to 1,200,000. Now I know the fluctuation is because of depending on what type of housing product sold in Aurora, but it looks like we've hit a bit of a floor here as to what to expect on price wise. So I think that's a great sign if you're a seller in Aurora that maybe a bottom has formed when it comes to price.
Yeah. And even just honestly, just stability in the market is a positive thing. It's a positive thing for buyers as well, because they have the confidence to then make that decision going forward, because you're already buying at discounted prices. The big hit has happened. We're down 20% from the peak, in some areas just a little bit more. So you're already making your money on the purchase in that sense, in the grand scheme of things. Now you just want to know, like, hey, am I doing it? And we're improving, or we've got stability. I don't want it to go down as I purchase from here. So I like seeing that. I think that's very, very positive. It's starting to see that consistency as well in terms of our new listings, which is positive to see. Active listings, still high historically and in that buyer's market. So again, buyers, still tons of opportunity and choice out there. And with that stabilizing can help share a little bit of confidence. And we did start to see a little bit of a rebound in terms of unit sales. So we're seeing that transaction volume start to uptick, which is nice, because when we hit this last year, I was like, that has got to be the bottom. I can't imagine fewer than 32 homes selling in the month of February for all of Aurora. When we take a look at average days on market, still trending upwards in the grand scheme of things. We did have some nice change month over month, but in the grand scheme of things, we have been trending upwards for that. And our months of inventory finally did roll over in comparison to where we were last year. So
see, this is a data set that people want to see. Prices stabilizing, transaction volume coming up year over year. Average days on market hasn't peaked out yet, but your months of inventory is starting to roll over. Your active listings are starting to flatline, and your new listings are still, over the last 10 years, very low. So this is a nice chart to kind of show potential stabilization in the Aurora market.
Yeah. Let's take a look at the specific segments now. So as we roll into the detached, still seeing a bit of that softening. Again, when we take a look at the month over month there, specifically now just for the detached comparison, we were looking at all freeholds before. We're now 1,453,000 for our median price. Months of inventory at 4.96, which has come down a little bit, which is great to see. And our sales to new listing ratio is up a big boost month over month. So that's great to see. Let's hope that this trend line continues. We saw that change in unit sales. I think that's where we're going to continue to see that coming from. Sales again up 33% on that month over month basis. Sorry, just to confirm, Matt, we are talking month over month for this bar. Is that correct?
On the inside? Yeah, that's the month over month. Yeah.
Thank you. And then taking a look at our active listings, we're sitting at 129, which is up just a little bit. Days on market have come down in the detached segment as well. And sale price to list price actually turning around and going up. So now we're at 98% of the asking price, which is an increase up from 95, which is great to see. Matt, talk to me a little bit about what we're seeing in the semis here.
Yeah, so semi, we only had one sale, so the data's tough on this one.
Yep.
Year over year, clearly this sale was a lot worse than last year's sale. So we didn't see a lot of semis move in the market. So this data is really kind
Not
of
much to do.
Not much. But what we do know is it sold on 5 days on market, which is really good to see at 98% of the list price. which you kind of want to see. But the active listings we can see are at 8 now. They're up 14.3% month over month. But I think next month we'll probably get a couple more sales in the semi-detached market to get a better idea of where it sits.
Yeah. I love our comment there. Very thin volume at one sale.
Yeah.
It's quite thin. Hard for us to pull the data on this one, but here it is for you guys. Now, when we take a look at the townhomes, it's funny. The townhomes in Aurora, in general, I would say, have taken a bit of a beating the last little bit, and part of that is the struggle that we saw in the condo market. It's been harder for people to take that move up step. We kind of cut out a huge funnel there for what we would typically see coming into the townhome. Taking a look at median price now, it's at $925. That's up 2.9% on a month-over-month basis. Months of inventory at 4.5, also up just a little bit, so we're gaining more inventory there. Sales to new listing ratio, this is a big drop, 10% there. Coming from 33% sales to new listings, you're almost trending more towards balance, and then this big change happens. It's like we're sharp decline, like we said here, into that buyer side of the market. Only 5 sales, 27 active, days on market sitting at 17. This is down a lot, but I think that's because of the amount of new listings. And when we see the new listings compared to sales dropping so much, I think it is because there was a bunch of new listings coming. So this is probably a skewed number. I wouldn't bank on that 17%, but this you can take to the bank. 100% of the asking price is what we were looking at across those 5 sales on average, and that was a big bump up from 95%. So I think, Matt, if I was going to take a look at this and knowing the Aurora market, I think agents and listing agents and sellers are just really starting to get dialed in on that pricing and starting to accept this reality we have here.
I think, with townhomes, semis, and condos, yes, detached still has a little, you're seeing deeper discounts from the sale to list price on them.
Exactly. Talk to me about what we're seeing in terms of the condos.
Yeah, so still in a sharp decline. We can see the red bar at the top suggesting year over year is still not that great. When we look at the month over month on the inside, median price is actually up 2.1% month over month. Months of inventory, though, did increase by 3.5% month over month. Now we're sitting at 4.4% 4.4 months of inventory in Aurora, which is a lot better than a lot of the other areas, especially the closer to the city you get. They sit at 6, 7, 8 months of inventory, so that's not terrible. Your sales to new listing ratio did fall by 3 points. It went from 36 to 33. So definitely getting into a deeper buyer's market, but also not the worst sales to new listing ratio that we've seen so far. And then looking at sales, we did have 5 sales, which was up 25% over last year. Active listings, though, did increase almost 30% month over month. The sales was up 25% month over month. And then days on market was down 13.2%, but you're still sitting at 46 days to sell. But the sale to new listing price is at 99%. I will say that that's likely sitting there because people have readjusted the price, relisted the properties, and they might be finally understanding where the price point is for the condo market.
Yeah. Well said. So if you're curious about what's going on in Aurora, don't hesitate to reach out. There is still some opportunity. And like you said, we may still start to see some more adjustment here on the detached side. Though we did get a nice bump. Maybe we've bottomed out there and people are starting to trend. There is a chance that we're coming into that sweet spot. It's something that we're going to keep watching particularly in terms of the median sale price. All right, rental market. Matt, thank you for adding this in here for us. So when we take a look at what's been renting the most so far in Aurora, it's really like 2 beds here. And so, Matt, talk to me. Are we looking here at freehold specifically, or are we talking about
no, this is just the bedroom count. So any type of property, whether it's a 1-bed rental, 2-bed, 3-bed, 4-bed rental, we kind of threw this in here to, in order for the housing market to stabilize, you do somewhat need the rental market to stabilize as
Mm.
well, because there's a lot of people that are buying homes and that have basement apartments, and they're factoring in how much they can afford, or they're buying these properties for investment purposes. So in order for that side of the market to continue moving in the right direction, they're going to want to see that at least rents, particularly in the 1, 2, 3 bedroom segments, are starting to stabilize. Now, we don't have a lot of data for the one bed because it's showing it's down 14.5% year over year. I think that's just um,
Low
the
volume.
low amount of
Yeah.
leases that we've seen. So I think the two bed's really a good way to look at that market there, because we did see 12 transactions and we saw that year over year it was up 1.9%, which is good because in a lot of areas we're seeing rents coming down. So that one held up okay, but we still did get 3 and 4 bedrooms. We had 6 leases in there, and we do see on that end that for 3 and 4 bedroom units, prices were down either 5% or 12% year over year. But 12%, you're going from the average rent of 3,392 to 3,275.
Yeah. I think the other important thing to talk about as we hit on the rental market here is for us to see those sales volumes start to return into the housing market. One of the things that came out of that year, the 2026 outlook, was they started breaking down the numbers, and they had a couple of polls and they had some data saying that on average, most renters view in terms of the cost of the home versus the cost of rent, their rent would have to go up almost $500 more to make it really financially this decision where they would rather own than rent, right? And we're seeing that disparity between the cost of ownership versus the cost of rental. And people, of course, still pay more for ownership. But at the same point, if there's too much of a gap, they'll just see the value in renting for the time being
Yep.
until those numbers start to make more sense. And right now, the number that we're hearing from those polls is about $500 a month away from where more renters would see the value in really pushing towards ownership as opposed to staying as a renter.
Yep.
All right, Matt, let's talk a little bit about what we're starting to see for the Newmarket housing market in terms of February 2026 data. We've 2 months worth of data that we can take a look at. Here we right off the bat, we see the difference in terms of Newmarket versus Aurora in terms of median price. We're looking at a median price of $895,000, which is down just slightly on a month over month basis of 1%. Year over year, there's the big hit that I was kind of expecting to see, down 18% in that stance. Months of inventory leaning towards the buyer side, still kind of balanced, but 5.4 in that sense, which is down just a little bit from 5.5 in terms of month over month, but up substantially year over year, which is why we're seeing this big change in median price. Year over year, we were very much in the seller side of things. We were down at 2.96 months worth of inventory. So sellers were sitting in a decent spot comparatively last year to this year, and that's why we see that softening there in median price. Sales to new listings ratio, it is trending upwards a little bit more so than some of the other areas we've seen. Again, moving from 29% up to 34%. Once we hit 40, we're balanced in comparison to buyer conditions. We are down again, just like we talked about months of inventory. We're down from 44% last year. So again, in balance last year, now trending towards comfortably in buyer conditions. Let me go back one more slide there. In buyer conditions in terms of that stat. Taking a look at active listings, we're looking at 254. This is up just slightly from January. Year over year, up even more at 13.9%. Our transaction volume up just a little bit. We got one more extra unit out of our month over month numbers, but down considerably, down 24 units compared to this time last year. Days on market is currently sitting at 42, so a little bit higher than we've seen in some other areas. This is up really only one extra day in comparison to January, but up considerably from the 26 days on market that we were seeing this time last year. Nice to be able to sell your home in under a month. Once it starts to get over a month, sometimes can feel a little stressful on a family. Sales to new list price, we're currently sitting at 97, no change from last month. And again, down from last year where we were over the asking price at 101%. Matt, talk to me a little bit about your thoughts on Newmarket. I mean, the biggest change, obviously, looking at last year is such a dramatic change in median price. And really, like that's the same percentages we talk about from the peak to where we were last year as a general term.
Yeah, it's clear that the housing product in Newmarket that's selling is on the more value range.
Mm-hmm.
Um, some of the more expensive detached, I think people might be looking at Aurora, Markham, Richmond Hill for some options instead of maybe spending up in Newmarket. But we typically see with Newmarket, we saw it in 2017 as well, when the market corrected itself. There was some deep price discounts that happened in Newmarket because it got quite a bit ahead of itself. So I think when we go to the next chart, we'll see that when you look at the prices over the last 10 years for February, we're down there. We're past where they were in the peak of 2017, and we're getting really close to where we were February of 2020. Now we've the value of our currency was inflated away quite a bit during the pandemic here. So, it's unreasonable to think that housing prices are going to go back to where they were in 2018, 2019, and potentially 2020. So we're getting close. I think we're getting very close in Newmarket when it comes to the price point here. But when you look at, it's really the transaction volume just keeps getting worse and worse and worse in Newmarket. It's not bottoming out. It's not forming anything. When we're looking at the average days on market, again, you're sitting at 42, which is the highest over the last 10, 11 years. Again, months of inventory up to 5.27. This is a story because you look at new listings and they've flatlined since 2023. This is a story about no one's buying houses in Newmarket like they were in prior years.
Yeah, yeah, and it's interesting to see the the real drop off in terms of the steepness in median price compared to 25 to where we are in 2025 to where we are now in 2026. This was really meant to be recovery time. And
Yep.
then everything just seemed to have broken last year when we talk about the
Yep.
world order of things. And it's interesting that Newmarket is really exemplifying that in terms of the the steepness of that correction in terms of
Yep.
pricing. Right
It's
now,
possible we see a little correction in Newmarket over the next couple months, and that's why
yeah,
we follow these data points every month.
exactly.
But this is an ugly February for Newmarket, and
Yeah,
I do think it will get better in the next couple months. I think potentially weather-wise had an effect to a
yeah,
degree. But next month's charts, you got to tune in for them because it's
yeah.
really going to paint a picture of what's going on in Newmarket, I think.
Yeah. And when we take a look at this, and if you're a seller that's on the market right now, or you're a buyer that's out there exploring, you can see the direct impact of where the current market is. That's why you're looking at this. You're watching this to see what's happening right now. And so sellers may have been experiencing this, like seeing neighbors, their competitors taking lower prices, homes not selling. We're sitting down here. You're not alone. This is the snapshot of what we're seeing here in Newmarket.
Yeah.
When we talk about where we're seeing the different segments really declining, the detached, thankfully on the month over month basis, that wasn't really their challenge, but year over year, which is what these graphs are, that's where we saw the sharp decline, right? That's our red bar on why we're illustrating that. Now, on a month over month basis, our months of inventory are up just a little bit. Sales to new listings actually improved a little bit, went from 33 to 34%. Sales at 28, we got an extra one in there. Active listings up a little bit to 148. Days on market increased as well. And our sales price to list price, this is probably the most positive sign that we saw out of that, moving from 97 to 99% in terms of sales price to list price. So as we take a look at this, it's just important to note to see how is this changing, right? Because when we're looking here, this is no longer month over month. We're talking year over year. So now we're
Mhm.
starting to see what's the health of the current market. What are we
Yep.
seeing change? So Matt, talk to me a little bit about what we're seeing in the semi segment.
Yeah. So, most areas don't get a ton of semi sales, but we did get three here, which is down. Last month we had six. And we saw the price come down almost 9% to
Mm-hmm.
676,000, which is telling me that you're seeing a lot of the value semi-detached in some of the older neighborhoods that are selling right now.
Yeah.
So some of the semi-detached and some of the newer developments and stuff are definitely not selling like the value because of the price point. And then the months of inventory, you're up to 6.25%. So there's definitely a lot of semis starting to pile up in the market here. And my guess is that it's more of the more expensive ones on the market in the newer neighborhoods. And then your sales to new listings ratio is at 90%. Like, this is terrible. If you're on the same, and the worst thing is you're seeing semis in other markets doing very, very well.
Yeah.
They're holding up very, very well. And for whatever reason, Newmarket's unfortunately piling up a bit when it comes to the semis. Like I said, sales down 50%, active listings up 31% to 25, days on market down 21% month over month to 18. So that's a great sign. And then your sales price to list price sitting at 98%, which is better than what we're seeing in some other areas for some other home products.
And you know what I think is important to note here? Like, February can be its own situation for the housing market in Newmarket. And the reason I say that is because when we take a look at these drastic numbers, you got 25 active right now and only 3 sales. This sharp decline you see here, these 3 sales needed to happen. I think that's just the reality of it. Those sellers, they needed to sell. And so when you know that only 3 are going to sell and that buyers got a choice of 25 others, the one way you can guarantee your sale is a sharp discount in price. And that's what we saw here on that month over month basis was a sharp.
Or sometimes it's just the price point of the home as well, like and the area and
Totally.
I think there's people that definitely can afford a $600,000 semi-detached home.
Yeah.
But they're going to be probably a much older product out there than some of the other places in Newmarket for townhomes.
Exactly. And so when we're looking at, well, the reason why Matt and I always over explain these ones when we have low sales volume is because it doesn't tell the full story. What I said could be very true. What Matt said could also be very true in terms of like, hey, maybe that 676 was the best price those semis had ever seen for that niche pocket, and they were just a smaller price home. Now, it is hard to picture, semis at 676 these days when we think about what the condo market is doing. But the reality is there is quite a variety of home types throughout Newmarket, just like there is in Aurora, where Aurora, the band can go quite high. In Newmarket, there's pockets where the band can go considerably lower as well. And that's part of the story that you could be seeing here. So it's not that the sky is falling in the semi-detached neighborhoods, but it is important to note that with 25 actives and only 3 sales, regardless of these sales, if these sales were at value, that is a challenge that this market is seeing right now.
And I will comment one more thing on that, because I've been dabbling in the semi-detached area in Newmarket for a client who reached out to me and wanted to get my opinion on price. They listed earlier in the year with another agent for almost $900,000. And when I looked at the property, they had overpriced significantly to start the year at $900,000. But when I was looking at it about 2-3 months ago, we were down to $750 where the price point could be. And I've been following it quite closely, and that numbers in that particular area has come down a little bit more, just because there's a lot of properties in that particular market that are coming up, and people, like you said, are taking lower prices.
Yeah. Yeah.
But we started the year in the 900s. Somebody got a 900 in there, whether it was overpaid for, I think it was. Yeah. But now those price points have come off quite significantly year over year.
Yeah. All right. When we roll into what we're seeing on the townhomes, median price hovering, stabilizing for a month over month basis at 817,500. And again, there's a big difference in home type and product here, right? Depending on the areas. We're talking about semis at a median price of 676 and a town on median coming in at 817,000, and the sales discrepancy isn't all that huge, 3 to 4. This is one of the biggest challenges sometimes when you're helping a homeowner come to price. They say, well, I've got a semi, they're just a town. Well, sometimes those townhome models are much more desirable. Maybe they've got the main floor powder room, or they've got the extra ensuite upstairs. They've got certain amenities that other homes don't have. Square
Yep.
footage comes into play. It's not just the type of home that determines the pricing there, because more often than not, I've seen a lot of townhomes outperform semis just because the type of product that it is, not because it's an end unit or a town versus a semi, but because of the product. So that's important to note as you see this big change here in terms of median price for what you may think typically of smaller versus bigger going semi to town. Months of inventory, we're up to 5.75 months currently. Sales to new listing had a big increase of 8 points. So that's very positive to see in the townhome market. Like to see that. Sales still low. It makes it hard to really take too much stock in this data other than watching a couple of the trends. But we see active listings at 23, days on market sitting at 29, which has come down a little bit. Sale price to list price holding steady at 97%. Matt, why don't you talk to us about what we're seeing in the condo market?
Yeah, we can see from the top there, we've got the red banner and the deep buyers market for year over year data. But when we strip it down to month over month, we can see that prices were up 6.6% month over month to 490,000. Our months of inventory, we're sitting at 8 though. There's a ton of inventory on the market. And this is even it coming down 27.3%, and we're still sitting at 8 months of inventory. So that's quite high. Sales to new listing ratio sitting at 24. Anything below 40 is a buyer's market. And this has come up 5 points. So it was sitting at 19 last month. So it's gotten a little better when it comes to sales to new listings ratio. And then we're seeing sales. We had, I believe, one extra sale there. So it was up 33 point, or one extra sale for 4. Active listings was actually down 3%. We're sitting at 32 now. Days on market, 68 days on market. That's one of the biggest takeaways. Now, that's just combined for the 4 that sold last month. So judging by that number, those properties were sitting on the market for quite some time, and they likely just had to let them go. And then when you're looking at the sales price, the list price, that kind of paints the story for you. It's actually down 6 points. So last year, they were actually selling above ask, and now they're down to 97% of asking price.
Yeah. And you know what, where my head goes when I look at that without seeing the exact listings that sold, when I see an increase in price and I see the days on market high and then the sale price to list price coming down, I think larger units, right? Something that was maybe a little bit more family sized, a little bit bigger, would help justify why we're seeing that gains in terms of our prices. And also at the same point, while we're seeing a gain in price, but sellers taking less. And so I think higher priced unit coming down a little bit, skewing that median just so, and of course why it took a little bit longer to sell.
Yep.
All right, taking a look at the Newmarket rentals, one bedroom's clearly dominating. We've seen 36 leases there, 2 beds down to 29 units, 3 and 4 at 18 and 13. This is where we start looking more at like the freehold homes. Median rent there at $2,650 for your 3 beds, 4 beds, making that big jump, Matt? Big jump to the $3,200 for that extra bedroom. 2 beds to 1 bed, not too much of a difference, and really the 2-bedroom units having the biggest adjustment in year-over-year pricing.
Yeah, I think the 1 bedroom, the sales to new listing ratio at 120%. There's clearly a significant amount of demand for 1 bedroom apartments in Newmarket. So if you're sitting on a 1 bedroom, you've got some fantastic pricing power in this current market. And if you're an investor as well, building 1 bedroom apartments, if you want to put it in your basement or even, putting in your basement, there's quite the demand out there in this market for it. Whereas we're seeing 2 bedroom, 3 bedroom, 4 bedrooms, the prices are softening, a little bit. You're going from 2,038 to 2,000 to 2,712 on the 3 bedroom to 26. So you're still, those areas are still weakening in this market, but the 1 bedrooms are definitely starting to strengthen.
Yeah. Love it. All right, let's talk a little bit about what we're seeing here in Georgina for the month of February. Like we said before, we've now got 2 months worth of data for the start of 2026 as we start taking a look into these markets. And when we take a look at our median price, and again, we've done this from the perspective of a buyer, because are we wondering, like, is now the time to start taking advantage of this? And really, we're sitting at 820,000 there in terms of our median price, 7% increase. So an extra $55,000 more expensive in terms of the median in comparison to what we saw in January, and a year over year gain. We haven't seen a lot of year over year gains in median price for the areas that we're looking at. Georgina is turning that around right now. Months of inventory, Matt, though, the highest we've seen at 10 months worth of inventory. Funny enough, this is down over January because we did we
Better than
did we
January.
did see some gains in the price, right? We saw some
Yep.
gains in the price, so there was some movement there on the sales side, but down 16% in terms of months of inventory on a month over month basis, but up way more than where we were this time last year. Funny that we were sitting in a balanced market last year, and now we've shifted so heavily into a buyer's market in terms of months of inventory. Sales to new listing ratio sitting at 21% currently, very healthy for buyers that are looking to take advantage of the market. That did go up a little bit. So you're starting to see more homes selling on our sales to new listing ratio and more median price growth. So it is trending more towards balance, or maybe even, just balance. If we can get to balance, that's what we're looking for in Georgina. But down year over year from 34% for our sales to new listing ratio. And like we mentioned, 40% and below is favorable buyer conditions. Active listings were sitting up 280. That's an extra 30 units comparison to last month, and only 3 more in comparison to the year before. When we take a look at transaction volume, we're sitting at 25. That's an extra 4 units sold in comparison to January, but down 28 units from this same time last year. Those February charts are going to be drastic to take a look at. Days on market, we're sitting at 27. Month over month, we're seeing a drop from 40, so that's not too bad, and a drop down from the same time last year at 34. Sales to list price, we're sitting at 97. This did increase 1% over last month, so buyers are paying 1% more in terms of those asking prices, but we are down from 99% this time a year ago. The buyer's market, Matt, months of inventory at 10 months, that is by far the highest we've seen on a year over year basis. Price up that 6.1. Surprising to see, quite frankly, especially with the months of inventory sales volume down year over year. It's 27 days on market. Bank Canada rate still 2.225. So let's take a look at, like, this is the big drop for me, Matt, when we talk about not only that transaction volume, but what was the other one that I really wanted to take a look at? Average days on market wasn't bad. Median price kind of showing stability because we went up month over month, and you can't see the January here. I think that helped hold us off in comparison to where we were the same time last year.
This chart for me is an exciting chart for me because you're looking at the median price flatten out. You're looking at new listings starting to level out and be on a historical average. You're looking at active listings starting to roll over. You're seeing average days on market roll over because people are pricing the properties better. What's dry? Like, no one's buying, right? So this is telling me this is a confidence issue on the side of the market where people have just stepped back and they're waiting to buy, because the only reason you have months of inventory at 10 and transaction volume at 26 is because no one's stepping into the market right now. Everything else is starting to stabilize. Yeah. So this is telling me when it comes to Georgina, we just need people to come off the sidelines, and you're going to see a nice uptick in price, I think, when that does happen.
Yeah. And so when we take a look at the different segments, like, let's look in here where we're seeing the actual change. And months of inventory, funny enough, for the detached did drop a little bit. So we're at 8.72. We saw some health there. We're looking at 820,000, and the median price was up 2% month over month. Sales to new listing ratio, like we said, increasing there for the detached. Sales up a little bit with 23, still 218 active listings. Days on market did decrease. Sale price to list price sitting at 97. No real change. Semis, no data really to look at, Matt, so we'll skip over that for now. With just the 3 active, nothing really selling. Their average days on market are currently sitting at 16. And when we roll into our townhomes, This is where we started to see more of the inventory kick up. So I'll pass this over to you there, Matt.
Yeah, so still a deep buyer's market for townhomes out in Georgina. Prices were down 1.2% to 713,500 month over month. Months of inventory was actually up 25% to 10%. Or sorry, 10 months of inventory. So definitely a big build up there. Sales to new listings ratio sitting at 20%. Anything under 40 is a buyer's market. So we are in a deep buyer's market. And then sales, we just had the one, which was the same as January. Active listings were up 25% to 10 active listings. Days on market increased 150%. That's only because we had one sale last year. So when combining both of them, this one was up quite a bit. And then sales to new sales price to list price sitting at 98%, which was down. The last month's was sitting at about, it got what its asking was for. And then looking at condo apartments, we have 3 active, no sales,
Yeah.
not a lot going in Georgina when it comes to that.
Yeah. Rental market for Georgina, predominantly we're seeing in the 4-bedroom, funny enough. Not too far off from what we were looking at in Newmarket, because Newmarket I think came in at like 3,200, so 3,160. They're actually doing quite well there in terms of holding up for their rent. 3 bedrooms, you're looking at 2,500. The 2 beds around 2,000, and the bedroom 1 beds at 1,900. So we have seen that continued softening. Like you look at year over year, we have talked about this a lot. We're starting to see that softening in rental prices. Days on market up for the 1 beds and the 2 beds, down in our 3 and 4. It is crazy. Like at least for the month of February anyway, the health of the rental market for those 3 and 4 beds. Like if you are looking for family style rental, it seems to be Georgina is where we're seeing a lot of that favoritism go right now.
Yeah, the sales to new listing ratio for the 4 and the 3, you're 150% on the 4 bedroom, 117% on the 3 bedroom. Strong demand there. But year over year prices, 3 bedroom down 11.5%, 4 bedroom down 5.7%. So people, the landlords there are willing to, because the demand is there, but the prices are
Mm-hmm.
still falling. So they're still willing to drop their prices. But when it comes to the 1 bedroom, year over year prices, there was only one lease, so not much to talk about there, but it was down 30% from what we were seeing last year.
We joke about who wants to move in February, but look at the amount of volume that we saw in these. Like again, sales to new listing ratio being over the 100%. We're cleaning out old inventory at this point, which is great to see.
Yeah.
And yeah, quite high and stable there, but still that softening in terms of the year over year basis. All right, everyone. Thank you so much for tuning in. That is our show for today. If you have any questions about what is going on in your local market, this data is all good. It's also helpful. But if you are trying to figure out what this means to you, we need to get specific. We got to talk about your street, your neighborhood, your pocket, your type of home. That is what really makes the difference in terms of how you stack up in this market, but also the opportunities that are out there available to you. So please don't hesitate to reach out to Matt or myself. DM, leave a comment, call us directly. We got you covered. We'll put our phone numbers up on the screen now. And so, Matt, any final words before we take off for today? And tell us a little bit something about what we've got coming next, because we've got that
Well,
next video.
yeah, coming next, we're going to talk a lot about one of the conferences that we went to that was hosted by Treb. There was some incredible data points that were in there that gives us a really, I believe it was Ipso. Ipso
Mm-hmm.
was doing all the contacting of individuals in York Region GTA, and they painted a really big picture of what's going on in buyers, sellers, and just people in the community's minds about the real estate market and what their expectations are this year. So it's definitely something that we want to share with everyone to give them a great idea of what the masses are kind of thinking about when it comes to the housing market in the GTA and York region.
Yeah, so stay tuned, subscribed. Check us out on YouTube. That is where you get all of our other videos outside of the Facebook platform. And we look forward to seeing you guys next time. Bye for
See you in the
now.
next